The stock market is sitting near all-time highs, and all around us, people are screaming that a massive bubble is about to burst. Yet, despite these widespread warnings, billionaire investor Bill Ackman is actively buying. Why are some of the sharpest minds in finance putting their capital to work right now, while everyone else is waiting for the floor to fall out? The truth is, waiting for the perfect crash is a psychological trap, one that quietly keeps millions of people on the sidelines, missing out on massive gains. Every investor eventually faces the same terrifying thought: what if I put my money in today and the entire market collapses tomorrow? Nobody wants to feel foolish for buying at the absolute peak, so they wait. They sit in cash, refreshing the news, waiting for a correction to create a safer entry point. This animated chart shows a market index climbing steadily over time, while the flat line at the bottom represents an uninvested cash position. While people wait for safety, the index pushes higher and higher, leaving the cash position entirely in the dust. The fatal flaw here is treating the stock market like a crystal ball. Average investors try to predict the future. Billionaires refuse to play that game. Bill Ackman's strategy relies on a simple reality: highly effective businesses compound in value. They continue to grow, innovate, and expand their revenue over long time horizons, regardless of where the broader market index happens to be priced today. Look at this long-term stock market chart. 10, 5, and 2 years ago, analysts labeled the market too expensive at every stop, yet the trend continued aggressively upward. Underneath, rising revenue bars represent actual earnings, providing the structural floor for the market's climb. There is, however, a massive gap between buying solid businesses and throwing money at the latest internet trend. Smart capital flows into these highs because investors focus on the actual evolution of the companies, rather than obsessing over the temporary sticker price of the stock. Most people don't lose their wealth because they make terrible trades. They lose it because fear freezes them, and they never actually start. Every single year that cash sits in a savings account waiting for the perfect moment, inflation quietly eats away at its purchasing power. Watching the market rise for years while your capital is stuck on the sidelines creates a profound sense of regret. The emotional weight of being left behind often hurts far more than dealing with temporary dips in a portfolio. Market highs are often the visible result of massive subsurface shifts in industry. Innovations in AI, cloud computing infrastructure, and modern automation are allowing businesses to scale at a pace that was technically impossible a decade ago, driving the valuation of the world's largest companies to new heights. By keeping everything in cash to avoid a drop, you guarantee a slow, invisible financial bleed. The illusion of safety turns out to be the most dangerous position you can hold. When the market breaks new records, retail investors are often gripped by the fear of missing out. Elite investors operate with patient, strategic conviction. The broader public, however, tends to panic buy, rushing in simply because they see their neighbors making money. Allocating capital into random stocks without understanding the business model relies entirely on luck. This approach removes the compounding advantage that makes long-term ownership effective. It is rarely the market high itself that destroys a portfolio. The real damage comes from emotional chasing and a total lack of strategy. To be clear, the takeaway from investors like Bill Ackman isn't that markets only go up. A severe crash could easily happen tomorrow. But as this visualization shows, with a single compounding interest curve sweeping upward over decades, the true rule of wealth creation is mathematical. You build wealth by owning great assets for long periods of time, without panicking during the drops. Waiting around for a risk-free, perfect entry point is a fool's errand. While average investors remain obsessed with fear, smart money stays focused entirely on the future. If you want to master the hidden psychological forces and the exact strategies billionaires use to navigate these markets, subscribe to Streets, because understanding the game changes the way you play.